Hello, welcome to this Market Snapshot with myself, Jasper Lawler, the Senior Market Analyst here at LCG. It's Fed Day, the US is setting interest rates, and so that's going to be our focus. In a moment, we're going to take a look at the Dow Jones and the possible implications there. But what could this meeting hold? Well, there's no press conference this time. There are no official changes to economic forecasts, so there's limited damage theoretically that can be done from this meeting. There's a risk, given that US economic data has been pretty positive recently, perhaps minus the slight miss on fourth quarter GDP, that the Fed could get extra hawkish, maybe make some sort of hint in the statement that they are prepared to hike rates more than 3 times this year. That would almost certainly be a dollar bullish reaction, possibly a stock negative reaction. We don't think that's too likely. What is possible is that the Fed make reference to the difficulty in economic forecasting while the fiscal outlook is so unknown, i.e. we don't know what Donald Trump's policies yet are going to be on government spending. Is this big infrastructure push going to make it through Congress? And indeed, will he be able to follow through on the tax cuts? Again, we don't know. Should the Fed reference this uncertainty, that could be perceived as a little bit dovish, i.e. they're just on hold until they know more from Trump. That could be weighing on the dollar, possibly positive for stocks. Another thing, of course, to consider when the Donald is to be concerned is that he may weigh in. Follow your Twitter accounts, because if Donald Trump does make any comment on the decision from the Fed, that would be perceived as an attack on the independence of the Fed, almost certainly be a risk-off event in markets and could send the Dow lower. As I mentioned, we're going to have a look at the chart for the Dow or the Wall Street as we trade it with LCG. I'm just going to pull up that chart now. So this is our longer term chart perspective on the Wall Street. It's the weekly chart, as you can see up here. Overwhelmingly bullish chart. I don't think there's too much denial. One thing that does have us worried is that there is some negative bearish divergence happening here, i.e. that a new higher peak has been made, but that's been followed through by lower peaks in momentum. It seems like price is still pushing high, but momentum is rolling over. It's now dropped out of the overbought territory, and there's a risk this could follow through to the downside. If we now take a sort of top-down approach and drop down to the daily chart, we can see that the short-term moving average, the 20, is above the 50. The longer-term moving average still supportive of an uptrend. And at the moment, this is just a correction within an uptrend. That makes us generally have a bullish bias on the market. But as you'll see on this shorter-term chart, the 4-hour chart, at the moment, what's happening is that resistance is not being taken out, but supports are. This support gave way, this support gave way, and more recently, this support gave way. At the moment, we're trying to probe above this little short-term area of resistance. So should we get a close in the short term above this area here, which comes in around the sort of 19,900, but obviously the 20,000 mark is the big resistance area. If we get a push through one, then the other, that could be a sign that this short-term pullback is over and we're heading back up to new highs. But at the moment, there does look like a risk that the market could push again to the downside, challenge these lows around the sort of 19,800 mark before trying to push again to the upside. So that's it for our snapshot for today. Obviously, the main event being the Fed and any possible reaction from Donald Trump. We'll be watching our Wall Street chart for any possible implication on trades. Good luck with trading. Thanks for watching.